Perhaps briefly take a look at the broader market. We saw the first contraction in more than a decade, certainly, but certainly also a contraction at the lower end of the market. But before we go into that, the bigger contraction for the overall market, the drivers we know were probably unemployment and, of course, the recession. Are we likely to see a recovery of meaningful note in 2010?
Well, it was more that contraction was more than just the recession. It started, the drivers started before that, a big inflation shock a few years, or spiking in 2008, and obviously the rising interest rates up until mid-2008. That set the platform for the property recession as well as the overall economic recession, I guess, and a global contraction as well. So there were a whole host of factors all coming together. So going forward now, what we have been seeing towards the end of last year for the market as a whole, the last 2 months was a resumption of price inflation. We have seen demand for residential property picking up, although it's nothing to get too excited about. Sure. Not really driven by the economy at this stage, because up until very recently we were in recession and we're not growing very fast at the moment. It was very much driven by the big interest rate cuts of last year, 5 percentage points worth, and then in response to that, obviously a little bit of relaxation by banks as well that does help mildly too. So it's an interest rate driven recovery, not yet an economic driven recovery.
When do you think then we'll have that second leg as a kicker for prices in 2010? Are we likely to see that in 2010, or is that unlikely to be felt until perhaps 2011 or beyond?
Well, I think this year we'll get some slightly more support from the economy. We're expecting a 2 to 2.5% growth rate. The global economic recovery is also underway. That's not a wonderful job-creating environment, but it's better than the -2 odd that you may have had for last year. So, sure. So things have got better economically, and that can provide some mild support. But I think we have to be realistic. I believe we're going to see single-digit house price inflation average for this year. I'm expecting around about 8%, so it's a far cry from the boom years of a few years ago. Sure. There are still high levels of overall household indebtedness relative to disposable income. That's a multi-year process in reducing, or deleveraging as they like to talk about, in the household sector. And so I think we'll only be on a more solid platform in a few years' time. So even, I think it'll take past 2011, maybe 2012, 2013, somewhere before we get to a situation where we're on a much more solid platform from a debt point of view and an economic growth point of view, and we may be able to grow at double-digit house price inflation yet again. I think that's a few years away, unfortunately.
And during the boom years, what we also saw was the fact that the lower end of the market, prices accelerate far faster than at the higher end of the market. I suppose the opposite happened as well when we were going down.
Yes, I think there was on the low end of the market, there was some normalization of the market. If you look at the former black townships, there was a lot of municipal stock that was dumped on markets, often at cheaper than market value. So the prices had to adjust to market-related values, and I think that helped the lower ends to outperform the higher end of the market. But the higher end did have a good run. It just had a good run earlier in the cycle. It was the one to peak first in about 2003, and then only a few years later in 2006 did we see that so-called affordable segment actually peaking in terms of house price inflation. The affordable segment hit the skids last, if you could call it that. It lags the cycle. And with this mild recovery, once again, it seems to be lagging. I think the lower income people have been hit a little bit harder during this recession than the higher end, where there is often wealth to back you up through hard times.
Yeah, the job losses have been greater in that side.
Yes. And so we've seen the higher end of the market, the volumes seem to be improving a little bit, or started improving a little bit earlier last year than on the lower end. They've still got some issues to work through there. But those are normal leads and lags, and one needs to be patient.
And your 8% forecast growth for the market, is that for the broader market?
That's for the broader market, yes. I suspect it might be a bit lower on the lower end because the affordable segment, I think, is lagging the overall cycle.
Can I pin a number on you for the lower end of the market?
I haven't got into detailed calculations, but my gut feel is it might be closer to something like 5% or so. I think it will inflate this year, though. I think everything will inflate. You know, although we've got a weak economic situation, it is improving, and I do believe that the full impact of interest rate cuts last year, which were significant, have yet to be felt. So there is still some support for the market, for the overall market, to come through in 2010.